Well, I want to talk about the book in a minute, but let's talk about the SPAC market because it does seem to be fading a bit. I'm curious what your take is on what may have been the rise. And I don't know, are we at the rise and fall already?
Yeah, I think we're in the middle of the process. I think the rise is because we've had a situation where it's very easy to create the initial stage of the fact. The banks that arrange it get paid. There's no risk. The sponsors have a big upside. Their carrying costs are very low. And so consequently, you've seen a huge surge in SPACs. The problem that they're going to run into is lack of targets, lack of viable targets. If you remember 20 years ago, when we had the dot-com boom, there was a period where companies could go public with a concept and a set of projections. And we had a very robust market until it stopped, and it stopped dead in its tracks. I'm not saying the SPAC market will do that. There will no doubt be some good deals that come out of it, but finding targets is very, very difficult. When, in terms of the M&A business, when it became a business, that was the most difficult thing to do. Try to develop options for clients, and the SPACs are going to have the same problem. They when they get to the point where they want to do a deal and where it's based on projections and it's very iffy, they won't be able to get the PIPE financing.
So here's the question, Eric, though. I keep getting told I'm a Debbie Downer when it comes to SPACs because I've been writing and talking about some of the problems that I've seen with SPACs, not because I don't want SPACs to succeed, but because my hope is actually that if some of the disclosures and other things come out, maybe they can get improved. The question is, do you think long-term it becomes a new kind of almost asset class or way for companies to become public, or it's just a sort of passing fad?
I think it's a passing fad, and I read your article. It's very good, very understandable, and I agree with it in terms of the sponsors having to match up their exit timetable with the projections. I think the market is going to take care of itself. I think the market will self-regulate with SPACs. Some people will get hurt, but like a lot of things now, we're in a very robust period with the lowest interest rates that anybody can remember, and that period will regulate itself, and I think SPACs will decline.
What's your sense of the future of the M&A market? You have been around and been part of some of the biggest headline-grabbing deals over now almost several generations, dare I say. And as companies get bigger and bigger, it becomes harder and harder in many ways, perhaps because of regulations and antitrust, for more deals of scale and size. 5-10 years from now, what does the M&A market look like?
Well, I think that it's on Wall Street, it's impossible to project 5 or 10 years ahead. I just don't. I think the rate of change on Wall Street is unbelievable, and I'm sure that M&A will be there, Andrew, because chief executives, CEOs want to use it. They're aggressive. They want to develop their companies, and that's part of the intrigue of business. They'll find a way to do it. And you're seeing it now. You see there are some big deals out there. The big insurance deal, that's a hostile takeover. People will find ways to do it. The difference is that the deals will be bigger. When I set up the M&A department in Lehman Brothers, 1977, $100 million deal was a major deal. We were just dying to do deals of that size. Now it's like a joke. Because the supply of money has gone up rapidly and has grown, and so the deals are bigger. But like I said, chief executives want to develop their business. M&A is a tool that's well-founded, and it'll continue.
Shepard Smith here. Thanks for watching CNBC on YouTube.